Hello guys, so welcome to this video. In today's video, I'll be talking about divergence in the market, right? So if you are day trading and you want to catch some peeps and make some profit from the market, all you need to do is to focus yourself on price action, because price action is key to making profit. If you are trading price action, you don't need to complicate your trading. You don't need to just put too much of indicators. You don't even need an indicator, right? But for those of you who are beginners, it's advisable to just apply one or two indicator. And that way, you will be able to see clearly what the market is doing, right? So here, I've just got a MACD, and I've got two lines, red and blue, right? So I will be showing you how to trade MACD divergence. Now, what do we have here? Okay, you can see that the MACD, right? We have a low here, we have a low here, we have another low. So we have higher lows, right? You can see that we have higher lows. And then you can see here, we've got a low here, we've got a low here, and then we've got a low here. So you can see that the market, the price is making lower lows, and the oscillator, the MACD, is making higher lows. So if we have here a higher low, and then here we have a lower low, this is a classic bullish divergence. And that gives us the opportunity to buy here. Now, my buy is somewhere here, right? So I enter the market somewhere there. If you guys can see clearly, right? I entered somewhere here, and that's the close above the blue line, right? And now you can see that I'm in profit because the green here, this is my stop loss. You guys can see that, right? My stop loss is here, and then this is my entry. You guys can see with 0.1, and then I've got my take profit here. You guys can see that. So my risk to reward ratio here, it's very good. If you guys can see my stop loss compared to my take profit, this is like 1:2, or even more than 1:2, right? But let's say 1:2. So if you are trading and you have 1:2, then you are good to go, right? If you are trading with 1:1, then you are scalping the market, and you don't want to be scalping the market when you are planning to day trade, and you don't want to day trade when you are scalping the market. So it all depends on your plan. Make sure that you have a good plan, and then you follow your plan. That's all about trading. Follow your plan with discipline, right? Like I said, here's my take profit, here it's my lot, and then here is my stop loss, right? We can see that here we've got a higher low here, and then here we have a lower low. So I entered somewhere here, and right now I'm in a profit on my way to hit my take profit. So the way to go in trading is just to use simple price action. Now you can see that in this trade, it's not complicated. It's just a simple price action. And right now I'm in a profit of about 40 pips. So from my stop loss to my entry is 30 pips. And right now the price is at, if you guys can see, 1.0671, 1.0630, which is my entry, to 1.0671. That's about 40 pips, 41 pips, right? From 30 to 70. So I'm making about 40 pips in this trade right now. So due to money management. I'm trading with zero point 0.1. Some people might be trading with 0.5. It depends on your capital, your account. So this is how to trade. Now, what I'm going to do right now is going to be cutting my losses, right? So I've gotten like 40 pips. So I can decide to cut this loss with just 5 pips, so that if this trade goes against me, I have nothing to lose than just to win $5, right? So this is the way to trade. And as I uh, as I end this video, I'm going to be cutting my losses immediately, so that if this trade goes against me, I have nothing to lose. So if you are swing trading, then you can use a trailing stop, right? Because that gives you the opportunity to use trailing stop. But if you're day trading, sometimes it's a little bit complicated to use trailing stop, because you are looking for 25 pips, 30 pips, and walk away from the market per trade. And you want to do that. And sometimes if you cut your losses, you can be looking up to 50 pips per trade. It all depends on your strategy, the currency pair, the momentum, and the market. And these are all that you have to put into consideration. And one more important thing, if you have a trade setup, it's not just all about price action. Actually, you need to know if there is a news release that's coming out. And if you have a news release that's coming out, you want to cut your losses immediately before that news, or you want to walk away. Take that profit and walk away if you are in a profit. And if you're not in a profit, if the market is against you, you have to just wait, because you've already planned your trade that if you lose, you're losing 30 pips. And if you win, you're winning more than 60 pips or 60 pips, 1:2. So if you know what you're doing, you don't really have to panic. If there's no news and the trade is going against you, you don't need to panic, right? So the only way you can just close your trade immediately, it's if you jump into a trade and then you just realize that there's a news release that is coming out in about 10 minutes, and then the trade is against you. You just want to close that trade and walk away, because when the news come out, there's going to be spike, and you don't want to be in a trade where there's going to be spike, because it's going to be difficult to make a good trade when there is a spike in the market. So guys, if you haven't yet subscribe, click that notification bell, so that each time I release a new video, you will be notified.